this year before rebounding next year. Growth will remain weak by historical standards as the fight against inflation and Russia's war in Ukraine weigh on activity. Despite these headwinds, the outlook is less gloomy than in our October forecast and could represent a turning point, with growth bottoming out and inflation declining. Economic growth proved surprisingly resilient in the third quarter of last year, with strong labor market, robust private demand, and better than expected adaptation to the energy crisis in Europe. Inflation, too, showed improvement, with overall measures now decreasing in most places, even if core inflation, which excludes more volatile energy and food prices, has yet to peak in many countries. China's sudden reopening paves the way for a rapid rebound in activity. And global financial conditions have improved as inflation pressures started to abate. This and the weakening of the US dollar from its November high provided some relief to emerging and developing economies. Accordingly, we have slightly increased our 2022 and 2023 growth forecasts. Global growth is expected to slow from 3.4% in 2022 to 2.9% in 2023, then rebound to 3.1% in 2024. For advanced economies, the slowdown will be more pronounced, with a decline from 2.7% last year to 1.2% this year. 9 out of 10 advanced economies will see growth decelerate this year. US growth will slow to 1.4% in 2023 as Federal Reserve interest rate hikes work their way through the economy. Euro area conditions are more challenging, despite signs of resilience to the energy crisis, a mild winter, and generous fiscal support. With tightening monetary policy and a negative terms of trade shock due to the increase in the price of its imported energy, we expect growth to bottom out at 0.7% this year in the region. Emerging market and developing economies have already bottomed out as a group, with growth expected to rise modestly to 4% and 4.2% this year and next. With China's economy now reopening, we project growth rebounding to 5.2% in 2023. Together, China and India will account for half of global growth this year, while the United States and the euro area combined will account for 10% only. Global inflation is expected to decline this year, but even by 2024, headline and core inflation will still be above pre-pandemic levels in more than 80% of countries. Core inflation has been revised upwards again to 6.9% in the fourth quarter of 2022 and is expected to decline to 4.4% by the end of this year. Adverse risks to the outlook have moderated since October, and some positive factors have gained in relevance, but overall, the risks remain tilted to the downside. China's recovery could stall, caused by greater than expected economic disruptions from waves of COVID infections, or by a sharper than expected slowdown in the property sector. Inflation could remain stubbornly high, with continued labor market tightness and growing wage pressures requiring tighter monetary policies. An escalation of the war in Ukraine remains a major threat and could destabilize energy and food markets and further fragment the global economy. A sudden repricing in financial markets could tighten financial conditions, especially in emerging market and developing economies.